commitments here, so I want to kind of get going here. So let's see where we left off. Am I sharing my screen yet?
Yeah.
Shorty, do you have any idea
Yes.
how long it will take? Because I'm in Europe and I have to put my kids to bed in
No, it'll
2 hours.
be an hour, maybe hour and a half, and then
You,
whatever we don't have left, we'll catch it.
You
It won't
left
be long.
off on 23, if I
Yeah.
stand correctly.
Yep. So setting up the quant tower, I don't think we want to waste time on it. There's better people on setting up quant tower than myself on YouTube, right? So it's not that difficult, right? It's probably
No.
10 clicks altogether. So if you do need help, if you're using quant tower, I can even do a video on it, like for what we need. I can
Yeah.
do a video, but I just don't want to waste too much time, right? Then the same thing for statistics. This is kind of what it covers. We covered yesterday what imbalances look like live on the charts. I don't think there's any value in spending time here wasting it on pictures, right? The my typical, just an FYI, like a note, I look for imbalances on 30 minutes. Can you scalp the imbalances on 5 and 10? Yeah, of course. But don't expect, to get these massive moves off of those. And they tend to fail more than 30 minutes. So 30 minutes is my base when I'm doing that, right? Okay. When you're looking for imbalances, there's a couple of things that I look for, right? I look for volume, right? That it's dying down as you're approaching that, because that would mean that, the the shorts are closing their shorts and they're buying to cover. And then also if there was a, imbalance, obviously it was because it's green. I want to make sure that the buyers are stepping in. So I want to see, for instance, I don't know, let me zoom in a little bit. You can tell maybe here there's some green numbers, right? You want to see aggression as you're approaching here, and then you see how nicely they basically are accumulating here. How do you find that pinch zone, as I would call it, is when is it going to pop? Usually you want to look at, some of these auctions, especially on higher time frames. I believe this one might have been daily. I don't remember. But if it's on 30 minutes, you want to find that where's that guy that had a lot, aggressiveness, like this guy 68 to, I believe, like 165. Breaking that is not bad, right? If you're able to hop over that, but ideally the last down candle that was there, find the POC and where was the lot of volume traded, and that's here. So I would usually look for that closest candle and the most aggressive seller, and then once you break that, as long as the delta matches, like this one here is really good, I would take that long. Not all the time is, just get in. You can get in and put your stop loss. Let's say you got in at 98, you're giving them, 13-point stop loss. Well, you better be aiming for about 40 points to get it back up
Shorty.
to pay out, right? Because you don't want to just have some sort of risk reward in your head. I'm risking 2 points, I need to get 6 points. Or if I'm risking 12, then you got to get 36.
Shorty,
Right?
I have a question. When you're looking at the numbers, especially for imbalance, you wanna look around around the area where you're at, and when you see a larger than what's around you, that's a good indication.
You keep breaking up. Does anyone catch it? Last piece.
No, he's breaking up.
Oh shit! Can you hear me now?
yeah, you keep cutting out.
We hear you, but you keep cutting out, and I can't make the question out totally.
Let me see if I can fix this. I don't know what happened here.
But you're asking if there's a large number. I'm looking for imbalances, meaning I'm looking for 3-to-1 ratio between diagonally. Like
Yes.
this 4,500 and 1,300. I mean, that's 3 times. That's
Yes.
why it's highlighted. Basically, the highlighting, why, highlighting is just a visual help, guys. You can take the highlighting, but then your eyes have to focus on a bunch of numbers that you can't read that quick.
Yeah.
So what these tools did, software, is like, hey, if there's a 3-to-1 imbalance, highlight it, right? And there's some tools out there that some of my friends have it where these footprints are actually diagonally shifted. So that way you can see it. It's basically pairing imbalances horizontally for you, but they just shift the footprint chart. So there's nothing to it. It's just telling me, here 6 and 2000. Of course, that's more, than a lot. Huge imbalance, right? And then you see here another imbalance. A stacked imbalance means that there's multiple imbalances right after each other. Some people use 2, some people use 3. I prefer 3 because it gives me a little bit more confidence. But I note even individual imbalances. I take a note like this one here. There's a lot of imbalances here, right? They're buying. So once you lose this, you're most likely going to dump, right? Because you had a lot of aggressive buying here. And if you're, remember, if you're coming up to resistance, like let's say it seemed like we were here, you see that, your delta is not, it's growing here, but it's slowing down, right? Look at the volume, and the volume is also, it fell off. And then you see that could be people selling the limit seller, right? Even if it's green, it doesn't mean necessarily it's a, it is an imbalance, but the delta is telling you it's 279. If it was that imbalance there, that would be 6,000 plus, right? There would be a large orders of positive delta. And you're not getting that. So sometimes these as resistance, remember, that can be the ask side sellers. That could be the passive sellers.
Shorty, if I recall correctly, you say when you approach a resistance, I want to look at orders above the level that you are coming in, large orders. Do you look at this at Quantile, or do you use Bookmap for that?
I use Quantile. I look at the orders coming in on the ask side, meaning on the right side of the footprint. So like see here, I mean, it was about 10,000 on this side, right? Let me see if we can get a chart up real quick. So let's see, we're approaching, resistance here, and look right here. I mean, this is some kind of resistance. We had I believe, sell side imbalance here on 10 minutes. Yeah, there was something here. Where is it?
Oh, I don't know.
There was a yeah. There was a sell side imbalance here at 85, and now I'm looking to see how's the ask coming, right? You see the ask is getting a little bit larger than the bid, 425, 337. It's a little bit more skewed to the right than it is here on the left, right?
Buoys. Couple extra buoys.
Nice job.
Nice job, guys. It really came together.
As you're approaching this, right, I'm watching to see if there's any, passive sellers waiting to sell here. And that's showing you here. And, this guy here tried to kind of buy the retest right here, and it did not work for him. And obviously you see the aggressive seller coming and taking out these POCs from 10-minute candles. So I'll look for here. And then of course you can look at the tape, right? If you have like time and sales, you click on it, you'll be able to see the orders coming in and see if that's lining up with what you're seeing at the top.
And do you use Bookmap at all?
No.
Okay.
No
And the level 3 you talked about, is that you have that on Quantile?
No, I honestly don't use it. It's so misleading because for me, for intraday trader, I don't care if there's a level at 2,300 or 3,900. It's useless for me. Level 3 gives you levels past 10 levels of the price where the spread is now, and it's not really helpful for me. I have it, but I don't use it at all. It's like $20 for nothing.
Yeah.
You don't need it. Okay.
I have a question.
Sure.
Is it passive sellers always at the resistances?
Well, let me ask you this. If you're selling shoes, right, and the shoes you bought for $50 and now there's a huge demand and the price is at 400, what would you do?
Can you repeat that one more time, please?
You bought shoes for $50. You bought Air Jordans for $50, right? And there's a huge demand, and there's a lot. Well, everybody's selling them at 450, and you have 1,000 pairs. What would you do?
Increase the prices, right?
You wouldn't sell it at 400 or everything you got?
Hell yeah.
No, you're right. Yeah.
I mean, you're making 350 a pair. If you want more, then you're gonna learn a lesson of capitalism real quick. Right? When the opportunity comes for you to make money, the opportunity comes and goes. It's called time. So when they have an opportunity, if they bought this, let's say here at 275, and an opportunity came for them to sell it at 385, 100 points, they had 100 contracts, you don't think they're going to sell? It depends, right? Are they a long-term trader entering right on the bottom, and then intermediate trader selling at the top? Of course, yeah. The market is always trading between short-term buyers and sellers and long-term buyers and sellers. And if a long-term buyer or a seller enters the market and a short-term player, like let's say us, does not notice that, what happens to you?
You get smoked.
You get smoked. Because when they come in, remember, what is their anxiety level of a long-term trader? Like, well, how do they trade?
They're patient, so low anxiety.
They put their orders in and wait for their market orders in.
And what about this right here? So they sit, and it hits the level, and then you see a massive spike from there.
Yeah, then
And-
they become an aggressive.
And basically, especially if the market becomes, let's say, too short or too long, right? They have to also cover sometimes. Hedge funds, pensions, long-term players have to cover. And if that happens, I mean, it can create a chaos. So when you're trading, you know, you said you would lift the price up more on those shoes. Well, if you're a major player of those shoes, right, you have to know who you are. If you're a major producer of those shoes, sure, you can do that. But if you're a guy that just buys and resells pairs and you're making 350 a pair and you're not willing to sell all your inventory on 1,000 pairs at 350 profit, either I have the wrong math or you have the wrong math. And I think you have the wrong math.
Okay. Shorty, perhaps you already explained, but just for me, I'm a passive buyer, long term, and I'm waiting at a certain level, right? For price to get there. So price gets there, then why would I drive the price up? Wouldn't that be just let them sell into me?
If you get filled, why would you drive the price up?
Yeah. So I'm switching. I'm a passive buyer for long term. I'm
Okay.
just sitting there, and price gets to me. So they're selling into me. I'm just sitting there, getting my order filled. Why would that create a spike up?
So let's think about this. This is NVIDIA. I'm looking in NVIDIA to see, you know, where the buying happened and where it most likely will happen again. So we accumulated here for about 5 months, right? And then you had something called markup. The way markups work, right? If you guys read any books about this, is they accumulate for long periods of time, and I don't care what you guys think. Then you get a lot of news about the stock. Once the stock has been accumulated enough, once they bought a lot of inventory and they're ready, then you get this period here is trend. It's the imbalance right here, right? It's more vertical. And just go back in time and study one stock. For instance, look at Meta lately. Same concept happened there. Did you guys not have, you know, look at these. Here's our entries. Another entry for shares. First entry, I mean, we had it, right? Identified. I think this chart's very old. So they accumulated, they popped it, they saw the opportunity to sell. And then when they came here, they had their resting orders just like you would to buy. When they buy, do you think they buy 100 shares? Or do you think they have an order sitting for a couple of million shares?
Yeah, they buy big.
So, and if they're buying big, right, they have to be buying, they have a limit order and those aggressive sell orders. So somebody's selling out of fear, aggressively at bid. These guys are just buying. And eventually, what happens if you, I'm gonna bring back the, the peanut butter example, right? So we have a peanut butter example that we use. You're a producer, you sell peanut butter, and your price was, let's say, at $30. So I'm just gonna take a zero over. Let's say $36. You had a jar of peanut butter here, right? What would you do if your peanut butter cost was $15? What would you do here as a producer, as a seller?
Sell aggressively.
You would
No.
sell aggressively to make money. Okay. Then you would look to buy it again. But can you afford to sell peanut butter aggressively at 15?
No.
No.
Why not?
I would drive the price even more down, I think.
You would run out of business.
Yeah.
You would not make any money. So what you do is, and this cycle repeats itself. Obviously, you see it here over and over. They accumulate. Then the news come up. This is the markup. Then, the bad news start coming in. And then they
Distribution.
drive the price down, right? So this is the same concept over and over.
So just for my recap, so they accumulate,
Accumulate.
and so it's not their accumulation that drives the price up. They first accumulate and then.
Well, here, I mean, they had, they accumulated for a long time here. And usually you will see these patterns hold, right? Until, if there was an initiative seller here, let's say you had a buyer of Facebook at 24, right? Well, you got net new buyers here. They reaccumulated and drove it up again. Then you have these buyers, right? They're basically holding the price. They're like, man, we accumulated here as well. Now we want it higher. They drove it here. You see how it wasn't really an accumulation. I would say it was pretty much like a strong low. You came in a little bit of time you spent here, right? 3-4 months. What is it? 3-4 months between, high range, 86 and 150. So they're buying, and then they drove the price back up and they're selling again.
Distribution.
Their goal is to offload the inventory now again. So they have their orders sitting and they just dollar cost average. They buy more. I mean, look at Warren Buffett and Oxy. Just look at Oxy when it reaches like 50 levels. Anytime Oxy comes to this level, look what happens to it.
Yeah, but you have bad feedback on your mic.
So what happens is that he has an order here. It doesn't matter if it dips through. He's just going to buy it. Warren Buffett will buy this here. And he's been buying it, right? Until initiative seller comes in and Warren Buffett's not buying that supply, this is not going to happen. Does that make sense? Makes sense for now. Okay. On the guidelines, I mean, I can go through these. You want to use 30 minutes, just like we use for volume profile on the daily profiles. I use 5 minutes to enter trade. Some of you guys use lower time frames, like 1 and 3 minutes. To me, that's just a little bit hectic, especially if you're trading NQ. If you're new to this, I suggest you trade MES, and not NQ or MNQ. I suggest you learn MES, and then the other thing that is going to teach you indirectly is a little bit of patience, right? ES doesn't move as volatile as NQ, therefore you're going to have to wait for your setups a little bit longer, but your stop losses won't be triggered every 2 minutes. So I strongly urge you to look at MES, ES, and size down, right? Your job right now is you're not going to make millions, you're not going to make thousands. Your job is to learn and apply the system and the process little by little. And then once you feel in 30 days, 60 days, you had green months, green weeks, you can increase a little bit. Don't increase 1000%. Go from 1 contract to 10. On MNQ or MES, you go from 1 to 3, right? And you can make money with those as well, especially if you have a good plan on trading and catch 40, 50 points. I think it's the easy to make $300 on those as well. When you're looking at these, high volume nodes, POCs, and by now every one of you should be aware of what's a CPOC, HVN, LVN. If you're not, we should be here shortly. But you wanna look for those, right? On Quant Power, there's multiple ways to do that, right? I mean, even if you just look at price action, right? If I look at these candles, I can know basically where are the nodes right now that I'm looking for. What volume does for us, it helps us identify clearly, where's the POC of that, where's the shelf, so that way you have to take the guesswork out, right? Especially if there's imbalances like this candle here. It's balanced, and this is the imbalanced candle, so you want to make sure, you're holding this level here, and obviously we're below it. So those are the nodes that you want to go after. You can quickly just grab volume profile, grab it from here to here and see, right? Oh, okay, well, they accumulated at this. The volume was really heavy at the top. Let's just grab less and look even here. Volume's still thick, right? So if you're below this volume node here, most likely you could sweep these equal lows here and go lower, right? So let's see. If you grab the whole thing, you'll be able to know. I'm just going to increase the tick size so I don't see these bunch of lines. So now you see, right, we were at the POC on NQ here. We had a decent sized node at 240. You're below this. If you're not able to reclaim this, let's say Sunday today at 6 o'clock, if you reclaim 270, we probably go 286. We clear this, you're going to tap this value area high. This is just quick analysis that I'm doing, right? Because you have a lot of space, single prints, and skinny bellies. If you fail this, you're going to chop all the way down, maybe go to the value area low because you didn't like spending time high. So identifying these high volume nodes is super important for you guys as you're trading and learning to trade. Because usually when you're trending up or trending down, you want to go with that trend. What I mean by that, I'm just going to go here for a second. Let's look at SPY. There is. Mr. Pips, what's change of character? If you guys are going to ask me to be here, want to trade, I'm going to make sure you guys understand it. So I'm going to let you guys out.
It's a change of structure that when you stop going from lower lows and you start making higher highs.
Change of trend. Yeah.
It's a change of structure, yeah.
The gambler, does that make sense? Trevor, mute it. Gambler, does that make sense?
Yeah.
It does? Okay. So this is considered change of character. So now, we popped above it nicely. Usually we say it's not valid when what happens in change of character? How do we know it's a valid change of character?
When it starts making higher highs and higher lows.
Yeah, and you want to see a full body close above it. You don't want it to, come short, come here, and then reverse back. That's not showing strength.
Yeah, that's not valid.
This one showed a little bit of momentum. It went up, and now it's back to this change of character, right? This is where we changed. This is where they had the high volume node here, and we'll draw that so you guys can see it. So let's grab that, grab it to the top. And here's the high volume node, right? And look where we bounced. Pretty good, right?
Mm-hmm.
So you had this one, and maybe it doesn't look like a high volume node to you guys right now, but let's see. Does it look like a high volume node now?
Yep.
So this is your high volume node. This is where it accumulated and you made higher highs. You even took out this high and you made, I would say, almost higher high here. You did. And then you basically came to the gap that you had here and you filled it. Right? I mean, you didn't fill it. I'm sorry. You just tapped it, cleared it, swept the liquidity, and now you're here. So now, let's say you lose this tomorrow at 442. Where do you go? Where's the next liquidity highest point that you have? And that'll be at the POC right here. You're looking at 440. And this should be rather quick, right? If you look at this, this is going to happen quick. And then you could even look at it. Well, from this point to this point, tell me how's it looking? And look what happened here, right? So I'm just grabbing pieces of data now, piecing to see how did volume go from one level. I could even change this, right? To see where's the high volume nodes from here to here. And I see this one has multiple distributions, right? You guys see that? I mean, they had a ton, 1, 2, 3, 4 distributions. And distributions means just you accumulated and you went up or down. And you see here, when they popped, look where they came back again. They came back right to this POC. So they went, what is it? They went almost $1 below. Once they reclaimed it, I mean, they just exploded from there, right? They went $15. So now if I'm just looking at this and I want to know like, hey, where is it that you're going? So this is your highest, second highest volume node from this is where they accumulated, obviously had intent to raise the price so they can sell it. And in the market on the floors, what's that called? When you're not interested in selling at low prices and you want to kill the shorts, there's a name for it.
A dull tape.
Gold tape.
That is a dull tape, right? So, you know, if you guys never seen YouTube it, people on the floor when you're trading on the floor in New York or wherever you are, if you're trading futures or commodities, there's different rooms, you know, for different commodities. And if, you know, somebody is super short and the price is not making lower lows and we're not clearing the bottoms, most of the time people walk out and they go get donuts. And then by the time lunch is over, who's going to drive the price up? Well, you see these little compression moves, as we call them, right? You see them doing this, and then it comes to this point, and then you see this. At this point, they're back into their chairs, right? They're back from the coffee and donut breaks. They come in and they sell it to you. Because most likely there was a sell-off at this point at some point. Like here, right? There was a sell-off, and you see here. Is it good?
Hmm.
You accumulated here, right? This was an accumulation. And look, you accumulated here and you had a massive drop, and look where they came back. And if you're new, I do not use a single line as a trading level. I have like a pet peeve of that. Like I can't expect this to be, if this hits, I don't get in short. You know how many trades I would miss in my life if I counted this 453, 52 didn't hit, I don't get in. You have to look at the distribution around this POC, right? Look at it here and see, right? Where is the distribution? I don't try to make them perfect. I would say, you know, I look for something that looks like it's condensed here and it has some kind of asymmetry here, right, between them. I wouldn't want to do something like this. If I grabbed a handful on top, I'm trying to grab similar amount on the bottom, and then you go here and look. This is what setup is this from our volume. We're about to switch to volume, so that's why I'm starting here. What setup is this? Drew, do you remember? You should, but
Sorry. I don't.
okay. Anyone else? What's the setup here?
Well, it's a P-shaped profile.
No, what's the setup name? You have this here.
Is that the accumulation?
Yeah,
It's-
guys, it's a freaking volume accumulation setup. Just kind of shocking. If you go here and you talk about this here in a second. Where is that? Not one of the setups?
Yeah.
I know I have a fucking 50 of them. I only have 3. I don't know. Difficult to remember it, but okay. So it's identical setup here, guys. Really, really, you accumulated, you went down. And then if you're to do the same thing, right? So right now you're making lower highs on 60, 55 minutes, right? You switched. So basically, what are we doing now? You know, you're again making lower highs and lower lows. So you're kind of in consolidation here. I would say it's a wider structure. You know, if you want to mark this as a structure here, it's a pretty big structure, but it's a range at the moment. And within the range, you can have higher highs and lower lows, and you're just playing the range. And this is a pretty big range, 431 to 460, 30 points. That's huge, right? And you that over and over. But overall, obviously, you guys know since I would say October, right? You're trending up. I would kind of look at it from this point, just so I exclude this data here. Even if I include it, I know the POC is going to be 411, 410. Like either way, it's a 410. It's not going to be anywhere. Okay, so 411. So this is the level I'll be looking. Is this the level I expect to hit tomorrow? No.
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 No, it'd be stupid of me and naive to believe that. But if it comes to this level, what do you expect to see in here to screw your emotions?
Break below that
Gonna
POC.
go lower.
No, you're gonna hear that the world's ending.
Yeah.
And then what happens here is I'll tell you the mental side, what happens to you guys, a lot of you guys. Man, I'm not gonna buy because this is gonna go lower. And then some good news come out. They do this, and then all of a sudden the world's no longer ending. The world's gonna go higher, and then they drive it like this, and then you're like, oh man, I missed the long, and then people start entering long at the levels where they have no business entering long, right? This
Yep.
is like here somewhere. This would not be a long level, right? If you were to think about it, this is not your long level. I'm gonna move here. This is definitely a take position out, meaning if I got long here, I'm trimming here or closing. And then once you clear that, then establish the value above it, then we go long, but you're moving now, 8-7 points.
Right.
But the idea, the key piece of this is your mental, right? You have to trust what you're seeing. I think this was, this stock when I don't know who bought it when I bought it, but you guys know when it was in 160s, 150s, what was my buy limit? A lot of you guys, some of you were here, I had them in 50s. And a lot of people laughed, man, you're crazy. There's no fucking way. 160. I said, sure, man, no problem. But I believed in what I see, and there was no volume, there was no interest on buying. They had to come back. Do I think that we can catch this to $20? Yeah. Do I think it happens within a year? I don't know. Do I care?
No.
I don't give a shit. If it comes to 20, I'm just gonna buy it.
Shorty, do you have time to do Disney real quick? Because I saw you posting something
Yeah,
about it.
I'll do Disney, but the idea is not to do analysis. The idea is that you understand the concept.
Sorry.
Yeah. You want to understand the concept, right? Does anyone remember this stock?
What is that?
Newell Brands?
Mm.
Nobody remembers it? Guys, check your stock scanning list.
I remember you talking about it, but it was like a little before my time.
Yeah, this was, go on my Twitter and we said, man, around $8. I got a little bit cheaper here, somewhere around here. This is a great buy, great company. We did some analysis on what they're doing. It was at that time on the monthly bottom, the volume profile was agreeing here as well. So you're telling me that this stock is, from 1970. Here you're giving us a return of what is this? Maybe 135% since 1973. So you look for stocks that are telling you where the volume is and what's going on. Like for instance, this one here, this is, the last rodeo for it. If it cracks below this level, then we're probably gonna catch it at 6. I'd definitely buy it at 366. I don't care if they go bankrupt, I'd buy it. right? But the idea is to make you scared, right? UNG is another one. This one's a little bit different, but let's see. Same concept here. Are they selling? Are they buying? I mean, if they wanted to sell off, they would have probably done it by now, and I don't know where they would go with it, right? But the idea is to trust these setups when you see them, like accumulations, drops, and retests of POCs. So when you think about, see stocks here, if you look at Disney, let's look at it for a moment. So where do you think Disney's headed? Just look at the chart here. I'll give you a 3 month chart.
Down, baby.
Here's your accumulation, right? This is your another accumulation here.
Yeah.
This period is going to be well known in history. I promise 20 years from now, there's actually a good movie coming out. I'll tell you guys a funny story after this about the GameStop shorting and the Robinhood CEO. I don't know if you guys saw it, but there's a good movie coming out. So it'll be fun to see what they did there, right? Usually it's after the fact and nobody goes to jail. But if you look at this, right, I'm on 3 months. Each candle is 3 months, right? What do you see here? 6 months. Just look, you accumulated here and you had an imbalance. You accumulated here, then you had 0 interest rates in the whole market for a very long period of time. And then, right, this is called, let me make sure I explain this a little bit better here. What is this called when you're accumulating and you pop and you come back here? Does anyone know?
Look above and fail.
Let's look above and fail. And the Wyckoff theory, what's this called? I'm teaching you a little bit, mix, but it's good to understand it. What is
that acceptance?
This is called a test.
Test.
This is where they're like, hey, we accumulated.
Yeah.
Can we see if we have enough people willing to buy here? And they're like, yeah, it's good. So what do? Let's buy some more. Let's scare them, right? And then we're going to buy a lot more. And what is this line here called on the bottom?
Value area low.
This right here in the Wyckoff. I'm teaching
Spring.
this
The spring.
It's called the spring. Right?
Oh.
It's called the spring, and then they basically ran over the people there. And same like here, have a little bit of creeks. They accumulate it, they pop, and then they have markdown. A lot of people, right or wrong, they started buying here, right? They bought here, and you see this. I mean, Disney is at all-time highs after COVID. Think fundamentally. Just, you don't have to put too much emphasis on fundamentals. Have you guys been to restaurants? Are the restaurants same full like they were before COVID and everything's identical? Do you guys feel like we're back? Do you guys think traveling is back?
I don't think so. Not like it was.
Just do some data now. Like look up TSA check-ins, look up some traffic, and see that the world's not back yet.
No.
People are not going to the parks anymore, right? As much as they used to. And then Disney is just in a very saturated business, not parks wise, but everything else they do. So they ran at all-time high, but why would you run it all-time high?
Sell to retail.
You need to sell it. You need to sell this crap, right? And now this is where my friend Jake went long. He went long here, and we had a chart where I said you do not go long below the shelf. Do you guys recall that?
Yep.
I said you do not, if you got to reclaim. You don't trade in here. You don't want to do that because right now, you're looking at some of these levels. Okay, I know we're going to go here very soon. They're going to give another pump. And then ultimately, you're going to come back here and you're going to be a great buy here at 36. But this is not something that happens overnight. People look at trading with no patience. Am I going to buy it at 36? Why not? Buy a couple of $1,000, put it in my kid's account, let it grow for them, right? Because obviously since 98, they accumulated here 95 to 2013. They stayed in the same range. Pretty wild to think, right? You stayed in the range over $29, which is a good range. I mean, on a stock like this, let's say I'm gonna stop right here. Well, I can't right there. So 6,056 days you're in this range here. And you're telling me that this is not gonna have magnetism to push the price here.
Yeah.
If these guys accumulated for 6,000 days and they sold all their inventory here,
Yeah.
you really think they want to buy it right here?
No. They're coming back down.
There's no volume here. This was all fake here. I mean,
Yeah.
this is just
Well-
the uptrend and this is news. This is Disney doing magic and all those shows and movies and a bunch of shit, right? And that's okay. I don't mind the stock. I'm just saying I'm not interested in buying it here. I'll let you guys buy here. I'll let them come back. You know, can you buy some at 66? Yeah, but it's a slippery slope, right?
Mm.
One single bad tweet, one single bad news, and you're going to lose 50%. So hopefully that makes sense. This is basically identical. So let me show you here. I'll push this up and you'll see why that POC becomes super important. There it goes. You see it. I mean, even if I extend, it doesn't matter what they did here. Problem is here. Look at this. And look at your highest volume, HVN here. And where are you? Call the double distribution. And remember, if you fail on a double distribution to the top side and you fall inside, where do you go?
Next volume node.
You go here.
Yep.
Does it happen overnight? No, this is, monthly, 3 months view. Takes time, but you're coming back here. Okay. Does that make sense to everyone?
Yes.
Okay.
Yeah, fixed.
Okay. So let me start with volume to make sure you guys understand. In the PowerPoint that I'm going to upload, I added a couple of examples when I see a good one, educational one, what everything that I see, and I annotated it here so you guys can see it. I think it's beneficial that you guys look at it, take it off and see what you see, right? This is not about me telling you nonstop what I see, but it's also you doing this and seeing if it's good, if it's a valid setup, share with the, the members. I would say we have probably the most knowledgeable people now on volume profile and footprints and all of the discords that exist. Because there's a lot of people that, took time to learn and are good at it, and they're continuously learning, which is the key piece, in my opinion, right? They're not stopping. And for a lot of people, I'm trading supply and demand. That's fine. If it works, that's great. If you have a strategy that's winning strategy and you've proven it to be winning, that's great. Just don't change it and adapt to the market, right? It changes, but it's adaptation, not really a total shift. Okay. Let's kind of go into volume profile, right? Is there anyone that has never seen volume profile? Let me just ask that. If there is, just say it. You've never used it, never seen it. Anyone?
I never saw it before I came here. Now I know what it is, but before coming here, I never ever saw it.
Okay. Anyone else? Somebody was speaking. Sorry, I could not catch who it was.
Mr. Pish, but I've never used it before.
Okay. All right. So, well, let's kind of go into it, right? So you guys can, for people that have used it, you'll get a little breakdown what that is. So what is volume, right? It's similar to the volume you guys listen to, but it's just the name of it. You have market profile, which is your TPOs, right? Time, price, opportunity. And then you have volume profile, which is what I'm going to cover first. I'll cover market profile as well. Volume profile focuses volume at the price. So let that sink. At $50, how much volume did we trade, right? It's an important thing to notice. And there's a couple of good books, right, that break that down even more. And I'll share one more book that I read recently on volume profile. And the guy goes, it's really basic, right? I mean, there was I would say from 1 to 10, it was 2, like entry level. But, you know, he had different perspectives and how to put the data. Before volume was, you know, existent on these charts, people used to plot this manually, right? You would take the data, how much was traded at that level, right? You would look at the bid size, ask, and you would plot it. And you would create a bell curve off of it, and you would know where that is. And now it makes it much easier. I know a handful of people that did it manually by hand, right? At the end of the day, they look at the daily profile, they get the data, you know, you get it in Excel or any tool you used, and you chart it and you create that. Now, you know, they gave us much better tools, and now we can visualize horizontal volume just with the click of a button. So volume focuses on volume at the price. Market profile focuses on time spent at the price level. When you think about that, it should be a correlation, right? If you're spending a lot of time at a level, maybe you're also having happy medium, happy equilibrium, and you're exchanging a lot of shares, right?
Yeah, you're
That means
happy.
happy buyers, happy sellers, right?
Yeah.
That's true 90% of the time. There's also, you know, the synergies between them where, you know, what if another time frame buyer comes in on a monthly value area low, like we just had on 43.50, if you guys recall, on ES off of the June value area low, right? And did we ever come back to it? Did we ever hit 43.50 again?
I don't think so.
No. I mean, they were really aggressive buying there. And I mean, I don't know who didn't. I expected that to happen at 43.50. We had that level. We had it marked to a penny. That's where other time frame buyers, they stepped in, and that's where long-term participants enter, and the short term is not able to realize that because they're stuck on daytime analysis and not knowing what is, right? Imagine shorting the break for like 43.55, and then you get clapped by 50 points in a day, and you're not adjusting. And what most happens when you guys are trading and losing money is you try to fade the bounce. What that means is you see the bounce at 43.50 and you're like, I'm gonna short it because it's a trend day down. I'm gonna short it, and then you're like, no man, it's like a V recovery. I got smoked on trying to short. That's because you failed to realize what? There's a big boy coming in. When a big guy comes in at that level and it's a strong low where they, you know, literally bounce on a penny and there's no accumulation needed, it was just a massive order that hit.
It's a
And you
wrap.
don't realize that as a daytime trader, man, you're gonna suffer a lot.
Yeah.
And that's what volume and market profile are able to kind of give you that, right? Once we identify, you know, it doesn't take a lot for analyzing a stock, right? And we'll kind of cover that shortly here. But you look at the monthly profiles, are you in balance? You know, how well are you being accepted above, below, on a weekly? You know, I would say monthly is a long term, weekly is intermediate long, and then I would say the daily sessions are your obviously daily sessions, and that's for day trading.
Yeah.
And then if you use FVP, the fixed volume profile, if you're using it more than a week, you're grabbing intermediate data, right? You can't expect that data to hit. If it does hit, you react to it, right? But you also react with it with such expectations that your trade might not work out in the next 6 minutes, right? If you're trading 3 weeks of worth of data on a high volume node and you're expecting to get a bounce of, you know, immediate, it can happen, right? But your expectations and alignment with the market have to be identical, right? Don't look at a 5-minute volume node and go 35 contracts on that node when you have a high volume node from 3 months right above.
Yeah.
Those are the type of things that a lot of you sometimes mix up, I would think. But if it's not true, then hopefully you guys keep on doing what you're doing. Volume profile components, they're actually not much, honestly. I'll go to the next slide because it's visual. You know, there's a point of control. This is your POC. The red line is your POC. That means point of control. That's where highest number of volumes been traded. So if you're selling peanut butter, right, and just go to a store. Go to, I don't know, Whole Foods, Sprouts. Look at the stuff that you normally buy. I don't know, all of you guys buy eggs, right? I would say that's a common household item, or milk. If the milk you've been buying is in the range of $3 to $3.50, the volatility on that price is what? Not that bad, right? One day you come back and the milk is $6.50. Are you buying it?
No.
But that you would perceive that to be overvalued,
Yes.
that it's over the value that you're willing to pay. So when something is on the value area high, that means that value, perceived value of that is at the high point. And what happens is people are not interested to buy it. You have sellers that are responsible sellers. They're looking to do what? If you're selling milk,
Offload their stuff.
they want to sell it.
Yeah, they want to sell it.
Like, do you guys remember, like during COVID, I would send you guys pictures if you're new. I would send them pictures of dragon fruit. My wife loves dragon fruit. You guys recall that?
Yeah, I remember that.
Yeah, the dragon fruit at that time was $12 per each piece.
Wow.
Okay, you can find pictures. I don't know if who's good at finding, but you can find it if you're older. Just type in Shorty dragon fruits or whatever you find, index it. I didn't buy it, but I posted a picture to you guys. I mean, perishable items have to be quick movements on prices, right? So I was like, okay, at $12, I'm interested, you know, knowing the area you're in. I was like, okay, I can maybe see some idiots buying this at $12. And every time I would go to Sprouts, I would take a look at it and see what happens, just to observe and explain to you guys how it works. Next time it went, it was 2 for $6, 3 days apart. It went from $12 for one, now I get 2 for $6. And then it went to, you know, they put $3 each, which is no different than 2 for $6, right? The idea is when the price is high and you're not getting participation, right? Just like footprints we talked about yesterday. When you lift the price so high and the auction slows down, what do you have to do?
Lower the price.
You have to lower the price. You have to lower the price and you have to see if you bring in the buyers. Did I buy those dragon fruits at 2 for $6? Yeah. I bought them, and last time, remember what I told my wife? I was like, hey, they didn't have any. Because she was pregnant. I was like, man, I'm not paying $12 for this. It doesn't matter how much money I make. I'm not giving you $12 for a piece of fruit, for one. And that's being a responsible buyer and the responsible sellers. They're playing the game as well. Their job's to make money. My job is to preserve my capital, preserve my money. Right? And the same thing happens in here. So you have the POC. This is where, you know, $3 is a good price for the dragon fruit. So people are happy buying it here. When you drop it to the bottom, sometimes they have those specials, like manager special. I don't know what they're called, right? You'll have some specials, some clearances, right? And you guys will experience that soon on cars. I've been tracking a GMC Yukon for some time. They used to be at 120 when I went to look at it. Now they dropped it to 94. I offered a guy, I called him, offered him 74. And he said, you're crazy. I said, sure, I'll offer you 65 next time I call you. And he said, don't call me. And that's okay. Do I need a car? Well, it would be helpful, right? Do I have to have it? No. Therefore, I'm not inclined to pay the premium right now. I'll just wait. And if you notice, anyone been buying a car lately?
No, but I saw Tesla lowering their prices like crazy.
Yeah, Tesla's we can cover it, but I think he has a different plan. I think he's shifting his strategy. Well, we'll cover Tesla, but cars, you know, they had troubles with inventories, with chips, right? Ford was selling cars with no chips for some of their units, like technological units, and they would say, when we get the chips, you bring in the car and we put it in for you. But they were selling at premium, right? Every car was at premium. I mean, my wife's car, initial one, Subaru Outback, we paid 35, I think, maybe 2015, so that would be like 8 years ago, brand new. They offered us 28 cash for it with 80,000 miles. So it depreciated about 1,000 per year for past year. That's unheard of, right?
I bought a second-hand BMW during the beginning of COVID, when nobody wanted to buy cars, and I checked occasionally the market price, and it actually went above the price
Buying
I bought.
price. Yeah.
Yeah.
It was crazy here, man. In the United States, it was pretty. I had a friend that. What did he have? I don't know if is it Prius
Catalytic converter.
Toyotas? No. Toyota Prius, I believe it was. I mean, he made like maybe 7-8K on his car. Depreciating assets are not supposed to do that, right? I mean, it's wear and tear, right? It goes away. But the idea is market circumstances changed, right? People are sitting a lot of cash and savings. Those government bailouts to people, whoever got them, they didn't do shit. I mean, I don't even know how much they gave to people. Let's say they gave $3,000. What are you gonna do with $3,000? I mean, at that time, you could have done a lot. You didn't work. You probably went online, spent the money, or a lot of traders just gambled it away. But the idea is you're given free money, not really free now. You're paying for it. And it inflated everything right now. And housing market went crazy, right? I mean, would you guys love to buy an inflated house with 8.5% right now? Ashley, how's that going?
Yeah, it's really hard. It's been really hard past couple months. The
I'm
buyers
asking
like,
because she's a real estate agent, right? I mean, you have to incentivize them somehow. They play tricks now. Buy this rate, drop these, buy these points. I'm sure there's a lot more that I don't know, but I can see, brokers and mortgage lenders figuring out shit. How do they keep this going? Right? But it's
yeah,
tough,
they're coming
right?
out with all these special lending programs now.
Yeah, and it's gonna get crazy, man. It's gonna get wild to take that because all the retail folks are out of their homes. If you sold a home and then you're forced to buy it at like 8%, that's a big difference. So does everybody understand now the value area high, low, and the POC, why they're important? I'll give you a few examples. And this
Yeah.
happens on every time frame: daily, weekly, monthly, quarterly, yearly. Dependent where we are in time, like here, like we're now in third quarter. It's not bad to look at the yearly and see where we are in a yearly profile, for instance, on ES, right? So if you look at ES, let's go here. We're just gonna go and we're gonna go day, and you can change that on your PVP. And you're like, okay, well, let's do this. If you do 12 months, and you enable it first before you click away. And here's your profile for the year. And just occasionally you bounce from where?
Value area high.
Okay. So they're telling you we have no desire to go lower on the value, right? If they're able to crack this, what happens? What do you guys think happens?
Going to the POC.
Into POC.
No, it was a trick question. Your prior year value area high is the first level you're looking at. Because this is the level that, it's been completed. This level here is developing, right? So once you crack this, the real level to defend would be 42.25, because that's the level where you are in balance for the year, right? If you look here, this was your balance for the year. This line, I can change colors, let's put them yellow so you guys can see it. So the yellow is your 2022 value area. And you see here, you went above, right? Obviously, the value area shifted between the years, the POC shifted between the years, right? And if you look here, we're almost in, no man's zone right now. We're trying to develop value above this. And also 2021 is right here. And you see that they're hitting, pretty good. They hit here, they hit here, they're trying to hold it. Now, if you know, this is almost like your no trade zone. Like it's not the best to trade in here. And you see it's nasty a little bit. But once you crack this level here, then you open up the doors here, you know, about 150 points drop. And you can validate that also just by looking at this. Let's say you grab this and look what happens. Is there much happening here? Yeah, I think this is the contract maybe. But there's not much here till about, you know, this level. So once you lose this, you know, you're starting to look ideally 43.50, which is your June value area high or low, I'm sorry. So once you lose this, the things accelerate a little bit. They're going to go faster down, and you will have these levels identified. But this is me doing analysis on 12 months, right? This is a big deal. And then, you know, if I wanted to look at it, okay, well, tell me month to month, like, how are we doing? Where are we? Are we in balance? Does everybody know what it means? Are you in balance? Pips, what does it mean to be in balance? Pips fell asleep. Gambler, what does it mean to be in balance?
I would say like consolidation.
That means you're in the value area. Right now, if you look at it, right, this is our prior month. This is your August, right? And this is your August value area, right? I'm just gonna try to, yeah, somewhere around there. Okay, so right here is your August value area. I'm just gonna highlight it so you can see it. The green zone is your August value area. For your current month, which is September, this is the value area. So are we in balance here?
Yes.
We are. We are in balance of the previous month and you're currently in balance. If you're to break current month balance, where do you expect us to go?
To the low value point.
Yeah, it would be going to the August value area low, which is 44.26. And then I'm just gonna add to this right now. Okay, I'm gonna grab RV in balance on the past 3 months. Here's your June. Here's your July value area high. Right, and here's your, I would say, I'm just gonna draw this as a little tiny zone, if it lets me.
But Shorty, why would you say go down?
If
Couldn't-
it breaks the value area low, there's the next search for value has to be to the bottom.
Oh, okay.
So now this zone here is very, very important, what we are holding. Once we crack this level, right, which would be the June value area high, and then the June value area low is right here. So now you see, you know, that these two overlapped and we are shifting value areas down. What do I mean by that? This is the value area high. Value area high shifted down from July to August, right? Value area low shifted from here to here. The POC as well shifted. So what does that tell you in terms of price action? That's telling you the acceptance right now. You're really not accepting the price higher than 45.50, right? They're being content to hold it in this. They're trying to build value to hold it in July value area, which is also June value area high. So think about, imagine this is the ice right here. Okay. If you break this ice, you're going to die. You're walking on thin layer of ice here, right? So if you crack this, you know, you're going to go probably here, 46.66. You crack that, you go to this layer. Then this layer of ice right here is pretty thick. And breaking this layer, I'm trying to give you guys an analogy. I don't know if it makes sense. This
Yeah, it
layer of
does.
ice here is rather thick here. For you to crack through this, I mean, to crack through this ice here, how much effort do you need? Probably not as much to crack through
Not
this.
as hard.
You're gonna need a lot more effort to crack through this balance here than, this tiny level here between July value area low and June high. So this is a pivotal level to hold and break. But once you're, inside here, like here, what did we do? I don't know if you guys remember, but we said if you lose this, I actually mentioned it here when we had the July, if you guys recall, I said if you lose this July value area POC, most likely, you're going to go to the bottom, you crack that, you're going to visit this 43.50, and it slowly got there. And we bounced right off of this June value area low. This is where the long time participants, what I was talking about earlier, entered. And if you're not aware of this level and you're ready to short, let's say you shorted this line here because it was a break of the low, we got 27 points, and most retail wants, if they had swing puts here, imagine they didn't buy swing puts here, right, on this break right here. Let's say they didn't buy on this break here, but they bought puts here because remember, retail likes to do what? They like to be late. They're late to everything. If you bought it here and your swing put for, let's say they bought December, okay? You bought December puts right here. What do you think they did on every one of these candles? Did they close it?
I
Yeah.
hope so, but they could have
That's
added
cover.
more.
The
Stopped
mindset
out.
of a retail trader is they don't have good stop losses, right? On options. What they would have done is like, okay, man, I'm just gonna go short it here because this is a huge demand supply zone. They're like, oh yeah, I got it, man. They got a good drop. They added more on this one. Then they're like, okay, well, if it breaks this and comes back, I'll add more. So they added more. So the total position is a net loss. And that's because they're not aware where to take a short. Why not short value area high of August? Isn't it better risk to reward short here than it is to short here?
Of course.
Yes, Shorty.
I mean, it doesn't make sense to me why somebody was short June value area low bottom. We're in balance. This is called a 3-month balance now. So if you grab this and you draw this POC here, look what it looks like. Okay, look at the area between these two shelves here. If you guys, you see how tight that is? I mean, I would say it's fairly tight there. Let's see if it prints here for us. Okay, so between this shelf and this shelf, it's fairly tight. So only once you crack above this here, right? I would say, for me, you guys know that 45 level on SPY was key. So once you're crack above this level here, 45, 46, things open up, and you're probably going to test these nodes here, like 4,600. Okay, 50 points up. But right now, if you lose this bottom here, 482, you have some volume nodes to hit all the way to 26. And I would not be shocked if they come back to this POC and hit it. And on this example right here, what could you do? What is it that we do when you're consolidating for a long time?
We explode.
No, I'm saying what do we do in terms of volume profile? What should we do here?
You buy the tops, sell the bottoms.
So let's just do this. We do, this is, let's see.
And then it's when you set up the SIGs.
This is where you set up the SIGs, right? So this is your first SIG right here.
Yeah.
And this is your second SIG. Does anyone not know what, first deviation, second deviation is? Or does there anyone not know what that is?
In math, I know, but not in this.
Good. That's all it is to it. It's math. So bell curve, right? If you look at this, you have the first standard deviation, and that's 68%. That's why we use 68% as value area. Above it, right, 13.6, 13.6, you add up 68 plus, what is this, 27.2, you will get 95.5. And then you have the little rest over, right, where it's like 99% of the volume is traded in that area. Usually when you're consolidating for such long periods of time, like say in this would be our first SIG right here, right? This is our first SIG on the bottom. This is our cumulative POC right here. And then we would change this guy and we would put 95, which would be our second sig here. All right, I'm just gonna make sure that this is extended right. Yep. Is this? Yeah, this is our second sig here. Pretty high. And these levels become huge, right? Where do you guys expect bounces on SIGs?
On the extremes.
On the extremes of them, right? So usually the 2-3s, right? So you know here that, you know, this is a pretty wide range between the 2-3-6. Typically, they're not this bad, right? And you see the top is actually identical. So as you reach this 46.34, it looks, you know, hard rejection. And even though that's all-time highs, right? But now you're able to tell if you're able to crack above this first sig here, 45, 42 or so, you have some room to go. How to identify the next levels is, you know, you have, I would say this July POC would be important to know. I wouldn't ignore it. Then I would have this guy right here. What would I do here is I would call this the zone for rejection right here, because that's a, you know, July value area high plus the 2-3 sig of the 3 months. That becomes a zone for rejection. And then here you would have, I know it's pretty wide. I would definitely not play this here of 70 points range on ES. But what is my pivot now? What is my pivot for bullish or bearish bias?
You're the CPOC.
The CPOC is
Yeah, the
my,
CPOC.
that's my level to tell me, you know, how are we doing?
Yeah.
And the only thing that you have to do after you identify this is to know, you know, would you short this like immediately here, or is it better to short it once it cracks this level? Well,
Once
it's
it
based
cracks.
on your risk appetite, right? I can't tell you, you know, this is good. Can I short believe 44.20 and this level? Yeah, I just know that there's, you know, 4,400. I'd be really careful shorting below 44.20 and 4,400.
Yeah.
Like I know there's a cluster of things in that area, right? That might stop me out. Okay. So that for now, as long as they're not breaking this, they're looking to go higher. Now, if they crack this 42, which we're not too far, you know, they can go even more. So on the 6, right, that's in here. So high volume nodes, that means that there's a high participation, right, of traders of volume. So if you think about, you know, let's say this, we're going to go from March lows to here. It's going to be at 41.40. So if you look here, there's a 41.40. Okay, good enough. You get the point. Let's see this one. I'm just gonna apply default so you guys can see it. Do you guys see where the highest volume nodes is always what? What's the highest volume node always?
The POC.
You'll see.
POC.
Yeah, POC, I was just making sure you guys get it. Yeah, the POC is always the highest volume node. Then you compare high volume nodes there. Where's the next one? Well, there's one right here, I would say, right? This is the highest volume node here. We're gonna extend it. And now you're gonna see why we were bouncing somewhere where we were bouncing. Why that level of 4,400, if you 44.40 was important. They came back, they bounced it, right? It was a good one. Once you lose this, let's say, you know, this volume node, then you have this level here below this shelf, which is 43.78. Why is it important? Well, because there's not much until 43.15. Does that make sense?
Mm-hmm.
There's no, what is this called here? Mr. Pips, you better go off mute, bud. What is this here? Do not answer. I want people that are new to answer. A lot of you guys should be aware of this.
Okay.
Value area low.
This is, no,
No.
no, hold on. let me explain value, because if you're confused on value area lows, there's a problem. Each session, you have a daily session profile, you have a weekly, and you have a monthly. Each one of those is going to have a value area high, value area low, and a POC. Okay. So if I go on daily, where's daily? Here's my daily, right? If I go on my daily profile and I enable it, yep, I'm on. So this is my daily. The blue one is my daily, right? I'm just going to delete everything. Where's my high volume, value area high and value area low here, pips? Approximately.
On the daily, the value area low would be
Here, I highlight. I'm giving.
45
Yeah, go ahead.
4504, and the
That's correct.
high would be
Yeah,
4518.
that's correct. So this is Friday's value area right here on ES. Does that make sense? And then the POC, let me hide this. POC is right here at 45.15. So the value area is about 14 points, 14 and a half points between here and here. Make sense? I can now, of course, change this, and value area of a week changes, right? So if I go here to, if you go under indicators, you go under technicals, profiles, and you click PVP, periodic volume profile. We're just going to select one so you guys see how I get there. Here's this one. And we're going to change the input to 1 week. And now we're going to get PVP for 1 week. And now you're able to do the same thing here, right? You're going to have value area high, value area low. We're not going to extend it. So let's see. So now, where's the value area high?
I don't know if that matters.
Where's the value area high and low of the week? This is the weekly profile, and then the what do you call it? The daily profile is right here. The inside, right? You should probably have 5 of them in a week. You see it? Where can you tell me the value area high and low of the weekly?
Value area low is 58, and the value area high is 530.
3125.
Where's the value area high for the last week?
4,531.
That's correct. So now I just want to make sure I understand. I'm not picking on you. I want to make sure you get it.
That's okay. It's okay.
Yeah. So a prior week to that is here, right? You see this. This is your week prior to that, meaning starting Sunday 27th all the way till the September 1st, right? That's the week there. And you see us, we are exploring prices lower, right? Value area shifted, value area high shifted down, POC shifted down, value area low went from 45.92, like you said, to 58. So now we are exploring prices lower, right? If we cannot reclaim this level tomorrow, right? I'm sorry, if we lose this level, not reclaim on top of the cap. If we lose this level here, most likely we go to 44.25, which level is pretty stacked, right? But my point is value area highs are different than high volume nodes. Now I want you to identify where's the low volume node on this volume profile here on the weekly. Here, this one is better. Focus on this right here. Where's the low volume node here?
Yeah, sorry, I just had a lot of things happening in the background. Would you say? Could you repeat your question?
Where's the low volume node in this highlighted area? Where's the high? Where's the low?
The low volume node would be like at the bottom of the
Low volume node means there's no volume, and that would be here.
yeah, at the bottom of this value area low is that
Yeah,
right?
outside of it. Outside of it.
Outside of it, yeah.
So this is your value area low. Right below it, there's no volume. Does that make sense? Because if there's no volume, it's not going to be part of the value area. Value area consists of how much? What's the percentage of volume for value area? What's the first standard deviation? Somebody can help him.
68.
The 68% of
68.
volume is right here between value area high and value area low. What that means, in the value area, 68% of today's volume was traded. Why would you care where we are traded? Well, it matters for a lot of reasons, right? If a lot of participants are happy in this range and they're not exploring prices higher or lower, that means that they're content and they feel like the price is what?
Balanced.
Fair, balanced.
Fair.
It's
Yeah.
good. As soon as the price explores higher, that means something shifted in the market, either news or some pieces of information came in and they're gonna either auction higher or lower. And then our job as traders to figure out where to.
That's where
Like
the
where's the
imbalance comes
area?
in.
What are we trying to do? The retest buys, long shorts, right? The other one, right, is you have the profile high, that's just your regular day high and low, and the value area highs and lows. So nobody should be confused, right? So right here, this is your high volume node on the POC, always going to be HVN here. This is your HVN, this is your LVN, right? And this would also be called high volume node because it's higher than these, right? This is, remember on P shapes, we were going to get into it, but it's in a PowerPoint. How do you play a P shape? I'm just going to draw this blindly here and let it go to the right.
P shape. We use from the top. We use the high volume nodes to exit.
Where do you buy P shapes? Here it goes.
Yep.
If you guys are wanting to learn this, I mean, the materials here, how to VC P shape, usually uptrend or downtrend. This is usually short coverings as long as they hold and they continue. It's a bullish trend, right? You're looking for high volume node on P shapes to retest them. And I'm on the weekly and look where we bounced. Does it make sense to everyone? I'm giving you piece by piece, slow,
Yes, Shorty.
slow.
Wow.
And that empty space there, we call that the skinny belly.
That's
That-
correct.
That
Low
usually
volume
means,
node or skinny belly.
yeah, that usually means that there's no volume there, so price goes really fast through there.
You see this dumpster and this is me. Okay. Everybody okay on high volume nodes? Low volume nodes? This
Yes,
is
thank
the
you.
slowest I've done this class. I mean, so you guys have to, if you have to go, that's okay. I'll keep covering stuff but now, if you think about it, this actually worked for the bulls, right? We bounced off the low volume node, which was also a week prior value area high, which was right here. You had a huge node here and they were able to reclaim that and hold it. So it's really constructive buying by the bulls. It's solid.
Yeah.
Okay. So now if you just kind of look on the profile, sometimes I do this on my 49-inch and it's just amazing how much, you can see. I'm zooming out a little bit. I'll go actually on 3 hours on the weekly. It doesn't change a lot. I actually tested it last night. It's not a big change when you do it. Just zoom out and tell me, where do you see a lot of red lines?
Right there where all the consolidation was. Right in the middle. Yep, right there.
Okay. Have you been here back?
No, sir.
Let's take a look at it. Where do you guys think this is going to be? Yeah, come on, you guys should know this level by heart.
Oh, I don't know, 4140, something like that.
Yeah.
I can't see it.
4120.
Yeah, it's going to be always around 41, 45, 40.
Yes.
It's not going to go anywhere.
I can't see it, but I know it.
Yeah. So this level is, again, showing you on the weekly basis, higher picture. It's important, right? But then as you start going, right, you see them, they pop from here, right? They pop here, they popped in a B shape profile. They did it again and they slowly started shifting and then they had some gap ups. They again had a wide range, right? When there's a wide range of balance, what does that mean?
Short
Is
cover
there
balance.
less buyers or more buyers?
More buyers.
There's never less than more.
More.
It's gonna be more. The wider balance in narrow price action, do you think the long-term traders come in or no?
No.
Do the big boys come in large range or small range, tight range?
I would say large.
In the large range, right? That's when they hop in, when the markets are, you know, and established in a very, very large ranges, they come in.
Yeah.
And they come in usually at the extremes of those.
And they
And
come in strong.
now if you look at it, right, here's the extreme of that large pop here, and here's the extreme bottom. And you just take a look at it, see how well did we go here? Did they defend it? They came here, they defended it, they fell inside.
Yeah.
And then they're like, okay, well, you don't want it here, we'll buy it on the bottom. They bought it on the bottom again. They sent it above. They tried to defend it here again. You see how they tried to spike it back up. Then of course, if you can't get above it, they're gonna gap above it, and we gapped above it. So they're trying to hold this above, because otherwise we're gonna be back in here, right, shortly in 78. But every week you're just checking, are you in balance on the weekly? Are you in the balance on the monthly? And where's the next value area that you can look at, right? You know, you break this one here, you know, you're looking at this one because it was a tight. That means there's a lot of short-term traders in here, right? And not a lot of participants. And then they had other time frame buyer come in and literally kill them. Look at the volume on this candle here. They're like, okay. And then they came back and then they killed them again. So the idea is you check where the balances are, where can we shift, where's the exploration, where's the access, right? And if you just look here, you know, from this dump to here, you see that we haven't been to this level again, right, on the top side. So if you're looking, let's say, for larger, you know, long dated puts, where would you get it? Would you get it here or here? Where's your better chance of winning?
Up top.
Up top. You have no chance to win here. You're shaking at night when you buy here for the puts. You're hoping that somebody comes in and sells here aggressively.
Yeah.
You're always going to have more responsible sellers than you're going to have initiative sellers. They're going to be coming here, they're going to be selling, right? Their idea is to buy here and sell here. Buy low, sell high. Simple, right? But they scare you here. Okay, so that's your weekly profiles. This is your P shape. Does anyone see a valid D shape profile anywhere?
D shape. Wow.
This is
There,
B.
there it is right there.
This is B shape. In a
Yeah.
B shape profile like this one here, how do you guys look to trade these?
We'll go along at the failing of the POC.
Yeah. Wait for the break of the POC.
That's correct. As long as the price is below it. I was kind of trying to set you up there. On this one here, right, you have it, but the price closed above it. Right? This is your P shape, but they recovered it. Right? So this is your node that you're going after. You can only do that if you close, then you come back and then you short it from there. But here they closed the whole week above it. So what does that tell you?
You're looking for new
So either they
value.
wanted value higher or they were trapping people.
But this seller here is a different time frame seller from somewhere else. He's coming somewhere from here.
Mm,
This is a long-term seller from somewhere here. Okay.
yeah.
And he sold off there. And then once you're able to absorb this guy and go, then you're gonna push higher. Right? So let's find a proper. Okay, this one will be really good here. Okay, this is gonna be a good one here. You're in a, watch. This is actually a important one. This is your POC of this one, and look what happened so far. You
Yeah,
came, multiple times and you got smacked.
Yep.
That's where the highest volume basically triggered the sell-off every time. Came back, retested, came back, retested, sold off. So if we are able to auction successfully above this, and let's say we go to somewhere, like here, right? They have a little level. Let's say they go here, they reject 61 and come back. It's not a bad level to potentially go long, right?
Go
And
long.
drive this, somewhere in this area, like 88 to 95. Because this P shape here on the weekly is going to play a role. So you play retests on a bearish trend, because this is the one that broke the balance. Do you guys see that? We had balance here. We had balance here for, I would say, how much? We had balance here for two weeks. Am I on weekly or monthly now? Sorry.
Yeah.
Weekly. So 2 weeks you had balance, and this is the profile that caused the imbalance to go down. Right? So now you're watching at this one here to see if they're able to auction above here where the highest volume happened. If they do, you're going to be targeting this value area high, which is at 45.90. I would assume that this POC here of the 2 weeks is going to be in that area as well. Somewhere at 45.90, 89, in that area right there. So you have this volume node here from the 2 months, and then you have this one right here to, do this. So how would you play it? Right? So an old advice I got when I started is, if you're planning on entry to get in here, right? And your stop loss was, let's say here, he said, enter where your stop loss was. Does that make sense?
Mm-hmm.
So it's a little bit different. Is there a chance you might not get filled? Yeah. For me, personally, if I was to play this, I would look to start a position here. It doesn't mean I take my chips and I throw them all in at 45, 85. Right? I know they can go here, 46.08, right? 46.40. How would I manage the stop loss, right? It's something like this, right? If I'm getting in here, and let's say I'm playing this right here, I would probably do something like that if they're able to auction above it. But where would I go target wise for this?
The POC.
You can, yeah.
The value area high.
How about something like this?
Oh yeah.
If I'm buying time, buying 3 months, right?
Oh, yeah.
I want to play it with patience, right? So I'm looking at 4.76. So I could even, I could increase this to here, and I still have my ratio that I need.
Yeah.
So if I catch in here, my stop loss is somewhere around 46.50, and you can play this and enjoy it potentially all the way down. Because what happened here, right? And I don't know what's gonna happen, but if this demand fails to take out this high here, what happens? It's showing you that this demand is here. It's no longer as strong, right? If they're not taking out this high here. And then you see on a sell down, when you're selling from, I'm just going to grab highest and lowest points. Look where we are now.
Mm-hmm.
Right. So you're telling me from this, area, you're not even able to break the rundown POC, and you're kind of rejecting right there at it.
Yeah.
So if you crack that, you see where the 45.91 is the value area high of the rundown, meaning from the top to the bottom where we started making lower highs, lower lows. So now I'm watching this area. If you're able to auction here, could you play this long? Yeah, why not? I mean, you could play this.
Yeah.
I would just wait maybe, for this level to clear here. Because right now you almost have a little bit of a overlap,
Yeah.
right?
Break of a character.
Yep. So you want to shift this, and then you're able to probably fly to this level here. It will be quick, probably a short kind of cover rally move where, you don't catch a lot of points. You come in late, you go long, and you get clapped. Okay. So that's finding the balances on the daily, weekly, monthly. So where's the intermediate seller, the weekly, where's the long-term seller? Let's say monthly value area highs. We call value area highs and lows the extremes, okay? Because it's an extreme high price and extreme low, and usually you have somebody coming in either buying or selling at those levels. Does that make sense?
Yeah.
Okay. Then you have the volume profile types. You saw me use every single one of these besides visible range. It's not my favorite thing to do. If you go under indicators, profiles, and you can do visible range volume profile. So basically whatever is on the screen, this guy's printing this here. Is it useful? I would say it is, right? If you have the real estate on your chart, it's useful. And it tells you right now for basically from here to here, where's everything? Where's your value area highs right here at 45.66, your POCs here, 44.20, and then you have a really nice gap, like right below here, all the way down to about 42.90 or so, like that.
Shorty, and if we go to the extreme and break and fall back in,
That's
isn't
bearish.
that where you say get out of the way?
Go to the extreme above and fail inside. That's 80% rule.
Yeah, but where is it that you say if we break one of the extremes, get out of the way?
Here, I'll give you an example. I see it right here.
Because it's gonna fly all the way to the other extreme.
So if you think about it, that happens on double distributions, right?
Yeah.
So when you have a double distribution, like
Oh yeah,
say,
that's right.
like
That's
this
right.
one here, if you're able to crack this double distribution, right? You want to be, in this picture right here. Let me go a little bit higher. I'll use this so you can see it. So if you think about this, I'm grabbing a lot of data here, right? We are right now, I mean, this is almost like 3 distributions, 1, 2, 3, and then the last point, for bears to hold on is here and here. So if you're able to crack this, you're going to go here. But if you're on a double distribution day or a week, whatever you want to call it, let's find a daily one so it's more relevant to you guys. If you find a double distribution day and let's see, and you look at it, once they reclaim a level or okay, here's this one here. So I would say this is a pretty decent double distribution day here. Right here, right? So you have this one here, you had a distribution that was here, and then you cracked it, and then you had this one here, and look what happened. You had a huge pop. Then this one here also carried almost like a double distribution for the day here. Look.
Yeah.
And look what happened. You fall back inside most of the time when remember, it's ping pong on double distribution. If you fall inside, most likely you're going to go to the opposite.
Yeah.
And you lost that, and look, whoop, huge sell-off, right? I mean, you're talking about 40 points quick.
Yeah.
And then if you reclaim this level, let's just extend this guy to the right. You're most likely going to go back to where previous distribution was of that one, and look where it happens. If you clear this one, get out of the way, right?
Get out of the way, yeah.
So on intraday, and usually you care about previous day, right? So if you're trading today, I would say this is a really good double distribution day yet on Friday, I guess, right?
Yeah.
You have a volume node here and a volume node here, right? So if you go on volume nodes and you go on profiles, there's the B shapes, right? And they'll explain how to trade it, Usually these are, I call them emotional people on B shape. Why do you think that? 1 second they're like, yeah, we're good here, and then the next second, no, we're not. So I don't, in B shape, it means just that they're not agreeing necessarily on the price intraday. Like they agreed for it for a moment here, then they send it higher, and then these people are like, oh, okay, well, you keep your hot potato, send it back here. We buy it here, and then we're going to send it back to you until one of the buyers like, okay, well, I think the value is higher, and they push, or from this level, they go down, right? If you're on the bottom like this right here, you see how we're on the bottom and you reclaim it?
Yeah.
It's a bullish setup, right? As this is right here at open. You came in, they trapped a lot of shorts on this candle right before open, right?
Yeah.
And then you see them, how they reclaimed it and they filled this massively. And then they
Shut up,
accumulated here, they fell, they lost this level, and just pay attention to what happened once they lost that level. Here's this level here. Look what happens. They quickly came back to the value area low, they reclaimed it, and then they pushed it back to the POC. Just like what we say the levels are, right? You reclaim this and you're gonna ping pong, and they closed imbalanced on the daily. So the daily's back in balance, right? If you're gonna do your weekly analysis, let's check weekly. Weekly is what? Back in balance, right?
Yeah, weekly's in balance.
So, and then if you check for whatever it's worth, you check this to the monthly. This month is still going on, but you can check prior month. And we are in balance on the monthly as well, right?
Yeah, August, yeah.
So here's your September value area high, September value area low, August. So you're in balance on all the time frames. And then if you look, right, you're in balance here, right? And I would say on candles, just candles itself, are you framing up or down on daily? Are we up or down?
Up.
Looks down.
Okay.
Up.
Up.
We're making higher highs, higher lows.
Yeah.
So on weekly here, are we framing up or down?
Up.
Well,
Up.
we were up, and then now we're making lower,
Down.
higher lows, lower.
It's a lower high and a higher low. What is
And
the lower
high-
high and a higher low?
Yeah,
What is that?
it's kind of consolidating.
That's correct. Remember, higher high plus higher low equals bullish.
Yeah.
Lower high plus lower low is bearish. And the other combo is consolidation.
Yes, sir.
So if that's true, I mean, your weekly is a lower high and a higher low. Lower high and a higher low is a combo of these two, right? Lower high and a higher low. That would mean it's consolidating and balanced,
Wow, thank you, Shorty. Thank you for explaining that.
right? And then you have monthly here, right? So you have a lower high and a higher low. So they're all back in balance, right? We have lower highs, but we haven't put in on here. We had monthly framing down, right? With the lower highs and lower lows, and now we're back in balance there.
Yeah.
And for them to end the frame, to go framing up, they would need to clean this up here, right?
Make higher highs, higher
They will
lows.
have to clean the previous month high, 46.21. If they want to frame down, they have to go 43.50. And then on the weekly, they would have to go crack this
Back
guy,
low.
crack this, and then here you're framing up, here you're framing down, and you see, overall, what we said, you're in about a 3-month balance.
Yeah.
So since June, you've been in balance here, and that's why we did this earlier. Does that make sense so far?
Yep.
Yes, but the beginning of the balance period, the other two candles to the left of the beginning of that range?
This is trend.
Oh, okay. Thank you.
This is them breaking this trend right here, balance from here. This is them exploring higher, and then they get back
Awesome.
in, and you see the lows are being put in. And that's where this guy comes
You know, where he drew the square, that's where we were consolidating, then we broke up to the top.
Yeah, that's
You
going to
can
take
find
practice
these.
for me to identify.
This is art, right? This is not science. This is more of, I mean, even on ES, right? If you go on 1 minute, happens a lot.
Yeah.
Like it's, let's do this.
After a while, you just see it. You know, you just open up the chart and you see it right away where it's breaking. You know, consolidating break, consolidating break.
So let's do regular, and now you'll see how much it happens during 1 day, right? It happens a lot,
Yeah.
right? So here's your, let's say this is your consolidation right here. And let's say you find the POC of this consolidation. If you use the right tools. What's going on? Is it not doing it? Okay. Something's going on. I don't know.
FPP not working.
Yeah.
Hmm.
It's not showing. Oh, maybe because it's 1 minute. Yeah. Yeah. Sorry.
That could be it. Try 3.
Yeah. I'm about to change it. Let's see. So
Yeah,
let's,
3 minutes it worked.
yeah. So if you look here, we consolidated here structurally, right? Lower high, higher equal highs and equal lows. You drew that POC. Same thing happens here. You popped from this balance, right? You made higher highs and look where we bounced. I'm using 1 minute. This, you know, I would say rather fast stuff. Right, and then if you just extend this guy here, look where we closed. So we started off, right,
Wow.
typical day. And I would say this is, you know, your low. And look, just a typical trading day. Then if you go here, same thing probably happens in this case, right? Where's the consolidation that's happening on the day like this is, you know, you seem to have something here.
Right there. Yeah.
And if you think about it, they didn't really give you a lot of entries
No.
on the retests here.
Yeah, not
Right,
much.
this was a nasty price. I would say this is a hard day to trade.
Yeah.
It
It
looks
broke up
easy,
a
but
little
it's,
bit. And
but this
then
is a difficult trade, you know, there's different ways to trade it, but you know, for newer people, this is pretty difficult, right? Especially when, you know, if you add analysis from a day prior here, right? This would be your PDL, right? And then this would be your PDH here.
yeah.
Now, you know, you're kind of like, whoa, what's going on, right? This is your PDL. You see them reject, came back, bounce, bounce, bounce. So they wanted to auction higher than previous day low. And then you see them, obviously a massive gap, right? Whether it's contract or whatnot, I don't need to know, but you see them gapping up.
Yeah.
Right? And this happens, I mean, same setups happen over and over. Like, right, I'm on 3 minutes, so it happens quick. But you see here, for instance, you consolidated here and look where you dumped and you came back and then you made lower lows from that level. Like this is your low, you cleared a low and then you came back to this level and you did what? So let's look. So you came back here and you sold off and look, you came back to it and sold off again. So you had no interest taking out supplies here at all. So that's just, and then you identify, right? You know, for the day type, are you having, what kind of day is this, right? It looks like a pretty good D shape, I would say, on the bearish side. Why is it a D shape on the bearish side? So if this is our D shape, so we saw, so far we covered a B and a P and a double B, and a D shape is, I would say, a common, right? It's a neutral but it has two sides to it. It has one that closes above POC and close to value area high. And it has one that's bearish, closes below POC and, either below at the value area low. So in this case, right, if you look at it, where did we close? Last
Under the
moments, right?
POC.
We went under the POC and then we went down. And if you look at your notes,
The bearish,
let's see, where is the
most
here,
likely
this one,
next day will open under the
D
POC.
shape. So you have this one, and then let me see. So look at this. There are two categories of neutral days: neutral center and neutral extreme. So which one is this that I just showed you?
Neutral extreme.
Neutral extreme.
Yeah. And look what it says. On the other hand, if the close at the low end and indicate the sellers and other timings have greater conviction. So now you go back to it and you analyze this, and it's like, okay, well, you close below it. What happens next day?
Down we go.
They started.
Yep.
And you're able to kind of see. Market gives you information, right? Volume profile is not a decision-making tool, but it's market information tool that helps you kind of identify, hey, what is really going on?
Yeah.
Like, what are they doing? Like, why are they doing that, right? You see, for instance, this one, I would say this is a D shape with the double distributions maybe here. Where did they close?
Above the POC.
What happens the next day?
We go right up.
Yeah, there's just some simple rules of the profiles, right?
Bullish signal when we close above the POC and
Yeah.
bearish when we close.
What's about this one? D shape, yeah, condensed D shape. You closed on the lower end, and
Yeah.
you sold off. So right now, this one here, right, that we're in at the moment, you look at this one. So they had tried the late spike, right, at 230. I would say that's late spike to push the price up. Now you go back to this, and what does it say?
They have
a lack of conviction.
If they rally at the end of the day, they come back and next.
That's called a spike, right? But where do they close? They close right at the
POC.
POC.
And the notes tell you you don't know, right? These type of days usually lead to balance.
Yeah.
The next day. So Monday we can expect balance. I don't know if there's news or not.
So that means probably a D shape, which we buy the top.
That's correct.
Yeah.
Okay.
Ping pong.
So, and then here's the type of days that you guys have, right? So we have a trend day. You would have, in a trend day, you don't put in lower lows. Okay. In a double distribution day. So what shape is double distribution day profile?
B.
Mr. Pips or anyone else?
Sorry, man.
Double B.
B. What about typical day? What shape is that on volume profile?
T.
Okay. Yep. What about expanded typical? Can you guys visualize that one? That one's a little tricky, but you can do it. Usually it's a D, but it'll have a node on the top or on the bottom. It's one of those days when you're like, okay, well, they consolidated it, right, for a long time, right? But then they run it up and break the balance on like late, usually between 3 and 4.
There could be a lowercase b.
It can be a P. Usually I see it as a D shape, but a little bit of a skew, right? So when you think about skew on a curve line, if you have this, the skews go either like this or down, or the skew goes this way, right?
Yeah.
And when you rotate the screen, you would see that this would be kind of like a B shape, and then this one would be like a B shape. So this one, for instance, here, right, it has that profile, and you see it. You see how here it has, has a high volume node here. POC is kind of in the middle, right there, a little bit more skewed to the bottom, more here.
Yeah.
Right, and then you see them have a node here. They consolidated and then they sold off here. So that's the typical day, right? That's this one here. Range day, these are this is basically goes to the top and the bottom, responsive buyers and sellers. This is usually wide balance and they're hitting tops and bottoms. That between, you know, number 5 and number 3, a lot of you guys will have a hard time figuring out the difference. And it's really difficult for anyone to find a true difference. Usually, you know, they bounce it. This one is probably the best day to make money because its risk reward are limited. Trend day is where most people suffer, believe it or not. Or this 6 or 1 is the worst days for a lot of people. Because here they're late to realize the other participants entered. Here they're pushing their profits higher, but market's not giving you anything. And then you get chopped up and you lose money. Okay. Any questions on this? Does that make sense, at least on the shapes? And you guys can, I don't want to read too much of the PowerPoints. I'm giving you live lectures instead of me going through each one of these and explaining profile by profile. Everything I said for each one of these is here. P shape, you know, B shape, how to trade them, B shapes, how to trade them. Okay. Any questions so far on the shapes?
No.
All right, good. Now you get into the little bit of market profile. So volume profile focuses a little bit more on volume. Actually, all of it's focused on volume, while market profile focuses on time. Right. So Peter invented this, and prior to him inventing this, there was no way to know it unless you're a floor trader, unless you're on CBOE and you're, you know, floor trader. You did not have data to see this. Then he came up with this, the market profiles, right? And he basically conducted the, you know, the educational piece for himself and his friends, like 81 to like 84. And then he started training the floor traders with this. It was exclusively to floor traders, right? And you're able to basically attend those sessions if you had a seat on the floor. And basically what it did, instead of, you know, having the data, it helps visualize it and gives you the context and the ideas, the value areas, you know, the initial balance, which we'll cover here shortly, to understand it. This is not an indicator. This is rather market profile information being handed to you. It is to support your thesis and your bias one way or another, or to make sure you don't get in like buying puts at June value area low, right? And those things kind of happen. And as you learn about markets profile, you're going to establish some rules on how to trade it, right? Hopefully you guys know the difference between market and volume profile. Not an indicator, price and time only. So this should be bolded. This is the important piece to it. So when you look at the structure of a market profile, it's very similar to volume profile, right? I would say everything looks the same, right? You don't have to have letters on it. You can extend it to be boxes. You can extend it to be literally identical to volume profile. The difference is that it's just one tells you how much time you spent, and one tells you how much volume you've spent at a level. So if you think about it, each one of these letters is called a TPO. And each letter represents, not each letter, like A, 30, 30. Each segment, each letter is a TPO, represents 30 minutes of trading. What that tells you is A went from 91.75 to 9100. That was the first 30-minute opening range. Remember, opening range, orb high, orb low. This is a 30 minutes. Oops. The B is another 30 minutes. And now you can see what happened to the B. B auction higher than the first 30 minutes, did it? You see it here? It went above. Agree? You guys see it?
Yes, I see it. But does the B at 9110 also mean it spent time there as well?
Well, it traded there at that level, but it didn't put in the lower low. It didn't go below A.
Okay.
Initial balance. How long is the balance IB that we have, that we play?
30 minutes.
Let me ask you. How
Or is
long?
it an hour? I'm sorry, an hour.
An hour. So if you're to look at market profile, what letters would give you an hour?
A, B, C, D.
A and B.
Yeah,
Okay.
A and B.
If each unit, don't make me treat you like my son. If one unit is 30 minutes and you have 2 units, that means two.
A and B.
A and
A
B.
and B.
A and B is your initial balance. Anything above A and B is called what?
Outside of the initial balance.
Called range extensions in market profile.
Okay.
You're extending the range of the 1 hour. The rules, typically, these are not coded rules, is if you're in initial balance and you're exploring lower, you do not want to be trying to catch along too much. But there's rules, right? I mean, those are rules that are like don't short above IBH. That can be true, but there's a lot of context that needs to be put to that. What if there's a value area high of a weekly and a monthly 2 points above IBH? Why wouldn't I short it? You're telling me that a day trade analysis is more important than a weekly and a monthly? No, because I'm going to have other time frame participants coming in. So when I say a rule, it doesn't mean it's a golden rule where it's going to work every time. You have to read the context of it. But so far,
the higher the time frame, the more weight.
Exactly. So you're going to get other time frame participants on the weeklies and monthlies, right? Now you see, this is 30 minutes, 30 C. Now you see D, right? D is the one that broke the balance. So that would be the, between, 150 minutes to the 180. The D is the one that auctioned lower. And you see where the overlap of the letters happens to be the most is called what?
POC.
That's where you spent the most time because you spent A, B, C, D, E, F, G, and H spent the most time here. And this is called broken up market profile. And this is what you guys are used to seeing like on volume. It looks like volume profile, right? But this is how the auction went. And the more they overlap, that's where the point of control is. Does that make sense? It's pretty good visual from a book. Does that make sense?
Yep.
A lot of people, it's like, hey, price stayed here. No, price went up, but every time it crossed, to spend time there, and the most time was spent here. So every letter hit this level almost, besides letter I and J. But you see now, when I say single prints, it's here. In a B period, we had single prints pushing the price down because there's no more letters next to it. Is there C right next to B?
Nope.
No.
Okay. If there's, so let me ask you, I'm trying to ask you a trick question. Is this a finished auction here or unfinished auction?
That's not a finished auction.
On the B, is it finished or unfinished?
Not finished.
Okay. Anyone else?
I would say maybe finished because it's only one.
So think about it. When something is finished, you have a buyer and you have one seller. You guys want to do the auction for $100 bill? I'll give you $100. Whoever wins. Somebody's going to buy it.
I still say it's not finished.
No, it's finished. When you have a single
It
print,
is?
it's finished. Yeah. You have, remember, at the top, you will have a buyer, right? And you're going to finish the auction. If you're bidding on an eBay PC and you have the highest bid.
Oh, I win. Yeah. Yep. Okay.
You won.
I'm the only one. Yep. Okay.
But if there's 2 periods there, and I think I wrote it. Okay. If you have 2 or more TPOs, top or bottom means the 2 periods we visited but was not able to auction lower or higher, it would be unfinished auction. When you have single prints come in, they become important points to know because usually that means it could be other time frame buyers and sellers coming in. Okay. Does that make sense?
That's good to know.
Why?
Yeah.
So that's TPOs. 2 letters means unfinished. On footprints, we are able to know that, right? Because there'll be a 0 on the top or on the bottom to indicate finished.
Yep.
If there's no 0 on the top or on the bottom of footprints on whatever time frame
Unfinished.
you're on, that's unfinished.
And usually the next candle usually, or the one after that, go finish it.
That's correct. And poor highs, poor lows, strong highs, strong lows. That's where all of this. So different names, right? You have buying tails, selling tails means finished, right? Then you have, when you have 2 TPOs means unfinished auction. Some people call them poor lows, poor highs, right? Strong highs, strong lows. Those are the type of names, right, that people call indifferently. Just like you guys have ICT coming up with FVGs and I don't even know all of them, right? Nothing against it, right? If it works for you guys, great. But like a fair value gap, Peter identified that maybe 35 years ago.
Yeah. Order block, fair value gap.
Yeah, I mean all those things. I mean, you see them here on.
They work.
You see them on market profile. You see them on volume profile, and they've existed for a very long time. Volume's been in the market since the market started.
Yeah.
Yep.
So nothing really changed. Okay, so everybody understands so far what we covered, right? Each letter, 30 minutes. They're called TPOs. I'm not going to go into more advanced where you do the TPO counts above, below POC. There's some statistical stuff to it, right? But each one of these then is going to develop value area, right? As this value area, same definition, right? Where did 68% or 70 as a default? Where do we spend 70% of the time? And you see, if you're to take each one of these levels, right, and add the weighted, how much time you've spent, you would see that this is your value area. Now we're exploring below the value area. Now you have a buying tail in I, right? So, and then you see the the close happens at the bottom here at the J, right above the single prints. And once they reclaim the value area, most likely they go to the top, and then it becomes a fight of the range, the top to the bottom. Okay. Still the 80% rules, if you're using TPOs, right, applies. Does that make sense?
Yep.
Okay.
Yes.
So it's just the terminology is different, and then understanding where the selling tail comes in, where the buying tail comes in, and it's the same in volume profile, right? When you think about this, I'm just gonna hide this for a moment, right? Let's say I'm looking for some kind of trend day from here to the bottom here, right? You see, right? I mean, the volume is 10 up top. That's probably, finished auction here, and the new auction is going to start. If you finished an auction, let's say at a marketplace for a car, are you going to keep bidding after they sold the car to Cuban?
No, of
Cuban
course
buys
not.
the car. What are you going to keep raising your hand? Nobody's even lifting the price. No, it's going to trigger a new auction, right? That's how it works. And then you see here, you can tell where the single prints are, for instance, in this case, ES, right? On market profile, you have the ability to do that all at once. So right now, what I'm showing you is a market profile. If I zoom in, I'm going to see those cool letters. And now you see, right, where you had, this is skinny belly, but it's not a single print. Single print means it was only one participant in it, one letter.
Participant.
Right now, you see, right, there was some buying that happened here, and then a lot of participants were in this area.
Yeah.
You see that right here. Then the red line here, what do you guys think the red line is?
POC.
The black line is the POC because it's the highest number of letters that were there. What do you guys think the red line is? It's not a trick question. Just
High
see.
volume node.
No, it's a midpoint of the
Sellers.
profile.
Oh, okay.
It's a what? I'm sorry.
It's a midpoint, meaning it's the half, 50% of the
Okay,
range.
the 50%. Okay.
And now, are you able to identify where the selling tail is? Let's see. Where's the selling tail? On this profile here, where's the selling tail?
At
Remember,
the top?
selling tails are on the
Oh,
top,
yeah.
and this
Yep.
came in period H. So, long from the alphabet. It came in
Mhm.
here, and that's right where they sold off. So if we want to auction higher, we have to break that to continue going there. And
Is
then we
that a
would look.
finished auction? Oh, sorry.
This one here is a finished
Yeah.
auction.
Yeah. Okay.
Okay, and then you hear on the bottom here, they finished the auction. They started a new one right here. Right. And now this is your POC, and you can see, surprise, where did we bounce? We went to the extremes. We did not like spending too much time above this value area high, obviously, and they cracked inside. They lost this node here that they were fighting for a while. They came back to POC and they closed on TPOs. We closed above the POC, right?
Yep. So,
Now I'm
Shorty,
just gonna add volume to this, and you guys will be able to see the volume. This is corresponding volume for that day. Okay, let me just make sure. Okay, yeah. So now I have volume and market profile lined up. Remember I said volume and the POC will match a lot of times, but there's times if it's a trend day, most likely it's not. Why would it not match on a trend day between market profile POC, TPO POC, and the volume profile POC on a trend day?
Because the price goes up really fast on
That's
high
correct. It
volume.
doesn't spend time there, and the volume is exerted somewhere else, meaning it's getting out quicker somewhere else. Like this one here, pay attention. It would be a P shape with the high volume node here, and that's where the POC is because it's a high volume node. And after this sell-off, right, and I would say an RTH session here, it starts, they sell off, but this was such passive auction here that it just dumped. And then it starts and then it goes lower, right? And now you see from this point, we're unable to reclaim that value area low, which is also the POC of this day, which was 9/6. I don't know what day that was. Thursday, maybe. So now you can kind of start formulating your data, right? If you look here, right, you see the value area low here is 505. The range low of that was 45.95. And then if you zoom out a little bit, that's also POC of this spike here, which is a lot of volume was out here, but the TPO was on the bottom. They spent a lot of time here, accumulated, but did they accumulate with a lot of volume here?
Wow, no.
No, the volume was exited at the top. So somebody was buying, but not in abundance. They were selling here. Right? So now you can see when I say we're in balance, right? Let me see. So this was the balance that you're in, right? So if you look at the value areas, right, this is the highest value area high from volume profile. And then I would look for value area low, and you would see that this was your range here of the value areas right here, right? And if you look at the structure, right, then it's something, more like this. This is your range high, range low here, and look what happens when you broke it. A lot of time was spent here, and then they dumped, then they added a lot of volume here, and then they dumped. And now you see what's happening with value areas on TPO.
They're shifting up.
They are shifting up a little bit, but you see that where we sold off from last time on volume on day prior here is also, TPO. And if you extend this guy here, look.
We're rejecting.
We tried to spend time here and we were not able to. So now if you auction lower than this, let's say tomorrow, which is now double POC here, it's really strong. If you're able to break this, and that means that there's somebody's coming in with force and selling, right? And usually when you find, like look at this, for instance, profile here. So single prints tend to be fixed. That means it's a very poor structure. Like you see this letter G in itself in a period, it's usually a strong candle. And you see here, that's a pretty strong candle. Then you have more single prints between 84 and 89, and they ran it. Now you're watching to see when did they fix this. Like at what point are they gonna correct this inventory here? So if you go here, I'm just gonna write array here for a second, so I don't have to slide too much. Let's double click this guy, write array. And look what they did. Did they fix it here? Yeah, of course, they came back, revisited. Look at this one that was wider. A wider single print needs what? More fixing than the smaller one. It needs a lot more data to be filled in on. Did they fill it? They filled it up completely, and then you look like, hey, is there more single prints? You know, there's, depending on what you use on your tools, you can highlight single prints here. Let me just add them. Okay, we'll extend them. So there's some singles here. You really don't have any more singles to the downside, right? All of them were kind of fixed here. And it's a really good actually balance at the moment. There's a single print here, right? So the range that has to be fixed completely here is all the way to 81. And then I don't see anything on the upside anymore. Yep. There's no more single prints there. And I'm pretty sure there's some past this point here. Let's just go. You see all these lines now popping up. So those are all single prints to the upside or downside. Not much on the upside actually at all. That means the fixings go all the way to 4,000 past whatever I clicked, 6 months, right? And now we're just watching. And I mean, you can, in my tool that I use, I can combine profiles. I can merge left. Now I have 2 days real quick, and I know 2-day POC on TPO is 57 and POC right there. So this is going to be a strong level, let's say for tomorrow. If they break below that, then they can visit 49, really tight range, right? If they're able to get in and hold above this value area high, let's say 68, for me, ideally, because I use the combo of volume, we got to auction above 70, take that out, then, you know, you can target 80 to pop, and then the VPOC sitting at 93. So I quickly have the levels, you know, where can it go? And you see now I merged a lot of data here, and you see where the POC is, where the value area high is. Once you're able to kind of crack this, most likely you're headed to this volume node at the top. Because there's a skinny belly on TPOs, some single prints here, right? A 81 that we had, and then you have not a lot of volume here, all the way to about 4,500. Does that make sense how I at least use TPOs? And
Yes.
there's letters behind this, right? You would have letters that are combining and whatnot, and now you're able to see more. So it just depends how you want to look at the data, right? So here's a couple of data points from 831, so about 10 days. We're at the value area low, so you really have to auction here above this POC on volume, and then you have a high chance to run it, like to these nodes right here, 4091. You crack that, most likely you're gonna head here to the 15 area. So this is TPO here, right? And you can use the weeklies, profiles, monthly profiles, same thing like volume, but you can definitely use it for better understanding. Right now, we're in a, I would say, 2-day balance right here between the two, and the break of the balance or the high range here, you know, 72 is potentially a good long on a retest. It needs to break above and hold, not break above and fail. Okay. Do you guys have a better understanding of market profile? Is anyone confused on any basis of it?
Much better. Thank you.
Yeah, I'm confused.
It's not that bad.
No.
It's similar, right?
I'm trying to get footprints.
Footprints is not bad. That's I would say it's easy, right?
Yeah.
Don't focus so much numbers. Focus on the bigger picture. But that's, you know, we covered the volume profile. I'm gonna post the latest one, PowerPoint, here in the Discord. You know, if you're rewatching this video, maybe have the volume profile up and read these notes, take notes, right? The rule I have is a smart guy writes it down, a dumbass tries to remember shit. Never works, right? So try to write it down, and learn from it. Then in the PowerPoint, there's some, this is basic stuff, SR flips, everybody knows this, trend lines, bullshit. Combining these SR flips with like volume and TPOs or footprints, that's what it is, right? You drawing a trend line and saying it's huge support line without the backbone of knowing if there's buyers or sellers, it's useless, right? So know that, and then I have some stuff here about just understanding how this is, from Anna Cooling's book and the Japanese people that invented the candles. It's not bad to understand how the candles and pressure points work on buying and selling. So that's in there. Volume trade setup. So that basically covers what I went live looking for accumulation setups and playing the retests. But the key as always is, go over the trend. Don't go opposite of what market's doing, right? So in this case, right, we're up, lower, high. Accumulation is here. This was your good shorting level right here on ES on 10 minutes. Right here, and I would say this is a perfect potentially short from longer standpoint here at 10 minutes, not 1 minute. Then you zoom out on 65 minutes, or zoom out a little bit on 65 minutes, and you see here, right, you had lower highs. So now you're looking, hey, where's the selling point on this, right? So you see that this is a high volume node that we are in. So it's gonna be stuck here because they're happy trading here. And the selling point was kind of in this area, right? You're looking, as if you come in this level, it might be a good sell because they're going to offload more inventory, and that'll be a short level volume accumulation setup. Then you have, basically value area examples of what it means finding new area. Where is the rejection of a new area? You break above PD value area high, you come back for a retest. This is the 1-2 punch. You're looking for a long there rather than short, right? Here, you're looking for a short, you break above and fail, you're coming under, and this triggers the 80% rule, which is also here. This is where you drop below the value areas. This happened Friday, right? Where we had, where was it? So this is your, remember, you break above, below it and you regain it. That's what this is. You break below and regain it. And you want to see if they give you a retest, right? So look here, they regain it, and I know it doesn't look like it, but on day time frame here, they gave you a retest. That little small wick, if you guys can see it, they gave you a tiny little retest. So if you're a scalper, that's plenty enough for you. If it's not, then you're waiting for a pullback here to this level, and then you're looking for potential long if that happened. Okay, so that's this. Volume accumulation, I think this is my favorite setup. I play that a lot. Right, I look for periods of consolidation and the retests of them. So just like we got a bounce, we had this level identified right here, which was 42 or 41 for us. I forgot, somewhere around here, right? You see it. So we came back to this level, and usually you want to play the first taps on these. When it comes back, you want to play it. Right now, I'm not really interested in this because it fired away, right? If I was playing this, and I did, right? You go here and you're catching 40 points on ES. Probably should be done trading for a month if you catch it with a couple of contracts, right?
Wow.
So that's how I played those setups, right? And I kind of go in the details of your checklist. Are you making higher highs, higher lows, bearish trend? You do not fight the trend. So that means if you're if you're framing going down, right? So where's my little thing? If you did this, right, and from this point you went down, now my short point is when you come back to this POC, I would find the POC of this consolidation because it went lower highs, right? You exploded lower, and I would look short once you find this POC or a high volume node, whatever that is. I would look for it there and short. Okay. That has a checklist for you guys, and then here's some examples of it, right? Where depends if you're scalping, using 5-10 minutes or longer periods, 4 hours or more for swings. 80% rule is super important that if you're new, that you understand it. I'll go over it here quickly, but basically it says the opposites of the value area is like attract, right? So 80, it says that if you open above or below the PD value area and they're reclaimed, then you get 3 15-minute candles or 10-minute candles, depending on your risk, to close inside. Then you're going to attract the opposite side of the value area. And the way it looks like, so this is right here is a previous day where the little shorty sitting. If you open above it, right, PD value area high, and then you fall inside, there's 80% chance that you're going to go to PD value area low. Okay. And then the same is true for the opposite, where you have PD value area low here. Once you're able to reclaim it, go inside, it's almost like what I covered here, right? This is the 80% rule here. If you go from here, most likely, you know, your first target's POC, second ultimate is value area high. Happened a lot on Friday when they're playing in the session of the value areas. So that's, I would say you guys should go and test this on TradingView or whatever platform you're on and see how it works. It happens a lot. Then you have some settings and parameters. I'm not going to go through it, waste time. You guys can read through it. This is something that I started putting for you guys where, like, what is my routine, what I do, how do I find the levels? I'll look at this. It's not a bad. I do have the shorty rules that, you know, for me, long way back, these were the rules that I've played with, right, on VP. So if you want to read them, adjust them, make them your own, sure, do whatever you want. Volume price analysis. This is Anna Cooling. I do suggest you read. She's a really good trader and a volume person. So I definitely suggest you guys read over this to better understand it as examples, but I suggest you read the book. I just took some snippets from it and there. On the fibs, is there anyone that doesn't know how to use fibs by now? All right. Well, if somebody needs help, we can do a small video, simple one on it, and I'll post it here, but it's straightforward on using fibs. So you have information here on how I use them at least. This is where we talk about break of structure and the change of character. So if you're not comfortable with it, this should explain it. Change of character means you're reversing the trend. Break of structure means you're just continuing in the trend that you're in, if I was to summarize it. Then I gave you guys some of your mental issues, you know, trading in the zone. If I was new and I was starting over, I would read this book a couple of times just to understand that you're going to learn more every time. I would say the first 4 chapters is going to feel like it's directed at you, and it is. So read it, understand it, and try not to do the same stupid shit over and over, and that's when you're going to see progress in your trading. I could go on probably even more, but I think it's a good stopping point because you guys absorbed a lot of data between the 2 days. And, you know, it's like a final exam. If you cram all the data in one day, probably you're not going to do well on the exam when it comes because it's all going to be scrambled in your head. So I think this is where we stop. And then if you have questions or suggestions, I mean, I'm definitely open to them for the class itself. If you need more explanation on one versus the other, or, you know, more details, that would help me and help others. Because sometimes for me, what's easy for me might be difficult for Cuban or vice versa, right? And it's just because we're all different. So if you guys see something that we can explore or expand, just message me and let me know what that is, and we can definitely do that. Any questions from anyone?
Yeah, Shorty, on your fibs, you got 0.32 of the 50%, 618, 682.
I don't use 3.8 too much. Yeah.
Okay, you just use the 0, the 50%, the golden pocket. Do you use the 786?
786. I use 70.7, but yeah, you can use 78.6 if you want.
Okay, and it's and the 1, and that's it.
I don't use 1 or 0 because they're just the starting and ending points.
Oh.
Yeah. So for instance, you know, you're looking for swing high, swing low, for instance. This is the daily.
Yeah.
This is our swing high point, and your swing low is here. I'm looking for rejection points in here. It hit
Yeah.
right in the zone. You see it bouncing off of 50%, right? So here,
So basically, you just use
bounced
50 and the 6 point.
61 and 70, right? I'm testing between this one and 68.2. Remember, this is the two levels. This is a really dangerous zone for shorting, good zone for shorting or buying, right? So I'll show you what I mean. When you're
And the
looking for
gold,
buying opportunities, you're looking from bottom to the top, right? So if I go from here to here, right, I'm looking, there's the 50%. That's where we defend it.
right? Your golden pocket is the bottom.
Yeah, this would be the pocket, right, on the
See it?
bottom.
Okay. And as far as and nothing
And
else.
this works on
past
every
that.
time frame. Like if you think about this, here's your, let's say the, you know, from here to the highs,
Yeah.
we'll go from here to the here, and look, it's kind of like right there.
Okay.
And then if I want to know where the rejections are, right? So if I want to know the
The
latest
top to the
rejection,
bottom. Yeah.
I can go from here to here and see, right, what's happening. So
Oh, yeah.
far,
Okay.
they
So you
popped over
basically
50.
just use like three of them, right?
Yeah. If I
Okay.
need extensions to know where can we extend to, that's different, right? That's your 127, 1618.
Gotcha.
But like for instance, this one's good here. Between this one and this one here,
Yeah.
you see them holding 50%. Really nice.
Yeah.
And then from the bearish side, it's this and
Yeah,
this.
because I've been using fibs a lot lately because, you know.
You see here, perfect hit, you know, golden
Yeah.
pocket, and came back down.
Yep.
Okay.
So Shorty, before you said you were gonna, I'm sorry, if anybody has any more questions, I'll save mine. You said you were gonna tell us about what happened with GameStop and something about a new movie or so. You said remind me to tell you.
I went to the movies last night. One of my friends called me. He was like, "Man, we got to go watch Oppenheimer movie."
Is that good?
It's good, man, but I fell asleep. Like I'm too old for that, man. The movie was at 9:50 and it's 3 hours long.
No, I feel you, man, and it's slow movie.
Wait till it comes on TV.
I started watching the same thing.
I just told him, I was listen, man, we're gonna treat it like a show. We're gonna watch the first half. I'm gonna fall asleep. He said at one point I was snoring so bad at the movies that he was like, man, let's just go. So yeah, don't take a older person to movies at 10. It's likely you're gonna fall asleep.
You gotta go for the matinee, not the late show.
Yeah, man, I told him I'm not going to movies at that time. But all right, guys, I'm gonna hop off. That's 2 days of sessions. For the new people, if you have questions, suggestions, just message me directly. I'll take them. We'll adjust it. And for your learning, right, this is more of a marathon than, you know, you're gonna do it in a month. You're not. It's the wrong expectations. You're not gonna succeed much, but you're welcome to try it. I suggest that you guys learn this, not copy it, right?
Thank you, Shorty. Appreciate your time.
All righty.
Yes, thank you, Shorty. Thanks. Bye, everybody.
Thank you, Shorty.
Bye, everybody.
See y'all later.